and its implications therein. Let me remind you who my guests are here this evening. Raymond Mulenje is the acting CEO of the Kenya Bankers Association. Thank you for coming. Right next to him is Anthony Mwangi, who's the CEO of the Kenya Association of Manufacturers. Speaking on behalf of small traders and importers from the MSME Alliance of Kenya, CEO Samuel Karanja, thank you for coming. And last but certainly not least, Edwin Mukabana, who is the chairperson of the Federation of Public Sector Transport. Gentlemen, thank you once again for being with us. Let me begin with where we started the last time, Raymond, and that's with you. When we talk about those transactions, yes, maybe you could break that down for us again. I know you touched on it a little bit, but now we've got essentially, according to these proposals, two sets of taxes. That's VAT and excise duty. Could you break that down for us and what it means for financial transactions?
Now, when you go to pay school fees for your child in school, the bank will charge you a transaction fee of 100 shillings. So currently, you will pay tax, which is excise duty of 15%. So you'll be paying 115 shillings currently. Mm-hmm. Now, this proposal for increasing excise duty to 20 and now putting VAT on top of it moves this 115 to 140. That's why you're saying there's a 25% increase. And this just makes this transaction very difficult. And unfortunately, now people are forced now to move outside the formal transaction formalities of banks, mobile banking, and we get back to cash. Okay. And the implications of going back to a cash economy, some would say that's good. You know, we go back to mattress economy. What are the implications of that? Yeah, thank you. Now, when we have cash, like at a store, there is an aspect of, at the moment I close at 10 p.m., but now I'm forced to close at 5 because I'm worried as to the cash I've collected during the day. Again, when you are a business person, currently with the digital channels, you don't have to be worried as to closing shop for you to go to the bank to actually be able to do the transactions. Mama Mboga currently, they access loans through the banks on their mobiles, courtesy of the transactions that banks can actually be able to assess. Now, when you move out of the formal transactions, we'll not even be able to access the digital loans that we are currently accessing. And they have brought a lot of dignity in that I'm in a restaurant at midnight, I'm running short of cash, I can actually be able to get a loan from a bank, courtesy of this formal mechanisms as to how banks now can be able to assess as to whether I can be able to get a loan. So that's the complication. Yeah, so you're saying it will drive people into a cash economy, which then has other, implications. I wonder, Samuel, what that particularly means for traders in terms of now the cost of financial transactions, because this applies to both, mobile transactions as well as the sort of typical or traditional bank transactions. Does this pose a problem for traders?
Yes, it does. And it's a very huge inconvenience. As my brother is saying here, most of the traders, we don't have the convenience of, lining up in the bank. So at our convenience, we can be able to transact. We can be able to pay a person in Embu. We can be able to pay a person in Meru. You can be able to get money, withdraw money from your account, and also deposit money to your account. So when you look at the transactional costs which are there, what will happen is that people are going to retract back and go to pillow banking. So what will happen is that money is not going to be systemized. So, and for example, if the money is not systemized and it's pillow banked, it means that we are not going to pay taxes because you see, you cannot be able to trace, the government cannot be able to trace the shilling. So it's going to affect us. Number two, when you look at the transaction cost, so obviously the end person or the consumer is going to, that cost is going to be pushed to the consumer. So obviously things are going to be very expensive. And so for us to circumvent the system, the financial system, so that it can become now cash system, government is losing huge. And that is why there's a science of reducing such taxes, because the moment the government reduces such taxes, the economic sense, you find that the government gains more in reducing taxes than adding taxes, right? So it's going to affect us.
Yeah, there's also the issue, Raymond, about, VAT. These financial transactions or services were previously exempt from 16% VAT. Now, explain to us what value-added tax is, because there's a question on imposing a value-added tax on a financial transaction. What's the challenge with that?
Still using the example of just paying school fees, where I'm paying school fees for my daughter, I'm paying 10,000 from my account to the school account. It's 10,000 which has moved from my account to the school's account. There's actually zero value add when that 10,000 moves from my account to the school's account. That's the essence of VAT, value added tax. And by definition, in the law of VAT, it says a good or a service. And it clearly says money is not a good or a service. So clearly, there is a contradiction here when you apply VAT on financial services, on money and money-related services.
Right, that has not gained value when it moves from one person to the next in terms of paying for a service.
Zero value completely, and then against the current law, which defines what a good and a service means, excluding money.
Okay. So there is that particular aspect, but then manufacturers are also concerned, with some of these proposals. So we've talked about the cost of financial services, and therefore those goods, that'll be added on to the goods as well. But what's the pain point for manufacturers, Anthony?
I think first it's good to define what manufacturing really means for the country. And if you step back, I mentioned about the jobs that we create. 362,000. That's just second to 900,000 jobs in the public sector. Though the contribution to the GDP is 7.6%, the contribution to tax coffers is 18% directly. That is 360 billion. But also look at the linkages manufacturing has with other sectors. Your viewers, wherever they are in the country, outside the gate there is a kiosk, there's a shop, there's a supermarket. All those are selling manufactured goods. That means that manufacturing powers, to a very large extent, retail and wholesale across the country. Look at the trucks and the logistics, all the trucks taking raw materials to the factory, from the factory to the market. Look at all the financial sector and all Raymond and all the banks that they provide for manufacturing sector. So it's a huge deal. If Kenya was, a house, manufacturing was a block in that house, you remove it, you collapse the building. And that is why we are saying, and we are not opposed to the taxation, in fact, because we pay quite an amount. We are most of our members are the most compliant in paying taxes. But what the theory, what we are disagreeing with is, do you tax ab initio, or do you encourage production so that then you can tax more? That's the only difference that we have. The government and the proposal contained in this act is to tax and not to encourage production. You're saying, can we step back and increase our production so that then you can be able to make more? We'll come to the specifics about some of those. But we get very concerned because some of the decisions that you see across this bill, there is nothing in that bill that encourages production, increased manufacturing. A lot of the proposals are actually putting levies and taxes and fees on raw materials that are supposed to produce.
And so what does that do for manufacturing?
What that does, it is to slow down the production. Because and again, we also have to look at the environment we operate in. We don't operate in a vacuum. Kenya operates within EAC common market, COMESA common market. We are not talking about Africa continental free trade area. Now, those frameworks define how we make decisions. Now, if you add levies taxes on the raw materials, what that does is to make your goods less competitive than your neighbors, Uganda and Tanzania. So while we were exporting to these countries, now we are importing.
Because
the Finance Act,
imported goods will now be cheaper than those manufactured locally?
Yes. And we go to some of these as we discuss.
Yes.
The Finance Act 2023, we were exporters of paper and packaging materials from Kenya. But just by adding a 10% export investment and promotion levy, we are actually now importers. Our exports have collapsed. The same to other products. So we were telling the government that first it would have been very, very, very important to do a regulatory impact assessment on Finance Act 2023 before you embark on 2024. Because if you do the same thing that you've done and expect different results, then there's a big problem.
Yeah. Interesting, and we'll come back and talk about some of those specific goods from the manufacturing sector that are likely to be impacted by some of the proposals that are in that finance bill. You know, Edwins, we've spoken a lot about, you know, the motor vehicle tax that will now be loaded onto, you know, insurance premiums, but perhaps more from, you know, the private motorist's point of view. In the public sector, this is likely to be, you know, you were talking about, you know, the investors are hustlers, the users of the service are hustlers as well. What does this look like? What are PSVs saying about these proposals?
I think the first thing we want to start is by saying that public transport is a public good. Public good is that it should be treated just like health, like education. But in this case, it is totally private sector driven. And that means that the government puts in nothing. What we are not happy about is that the same government that doesn't put in anything is loading costs onto the same sector. The sector that drives the economy. The sector that you want to make it cheap so that people can access jobs, people can access education, people can access leisure, people can access markets. So we are saying once you start putting on costs like this motor vehicle circulation tax, and should be noted until 2015, buses were not charged VAT. And things have been being loaded on and on and on until we have reached on the motor vehicle circulation tax. I do recognize that other vehicles are involved, but we are so much concerned because a bus is a high-value vehicle. So when you talk about putting on a tax of 100,000 to be collected by an insurance company, insurance companies that are collapsing, you are throwing us into a doldrum. We just don't know how that is going to happen.
Let me ask you this, because we've heard the sentiment around this motor vehicle tax, that perhaps it might drive people more into the public sector, public transport sector space. You've heard statements like, if you don't want to pay the motor vehicle tax, then don't use your car, and that maybe this is something that'll spur the PSV sector. Do you see that happening in your space, that now, you know, less people having their personal cars out on the road and now taking a bus, taking a matatu?
Perhaps we are yet to see that. But what we have known about Kenyans is they're just likely to take corners.
Right.
What they're going to do is, instead of a comprehensive insurance, you put on a third-party insurance. You keep dodging around, sometimes driving without insurance because it is too costly for you to do that. So we do not expect people who are so used, and until the public transport is elevated to a certain level by investment by government, it is not easy to draw a person who is so used to having a car to leave his car at home to come into the current public transport. So we think that it will not do much, but when you go to the high end, a person who has got a VX of 17 million, when you tell him 100
is the maximum, yeah.
Is the maximum.
Yeah.
It's
not really taxing the wealthy, is it?
Yeah, you are not taxing the wealthy. You
if that was
are taxing
the
middle class.
Right.
And these people who are bidding to try and buy a car. So the super rich are not going to feel anything.
So tell me, if you've got an increase in the insurance premiums that you are paying, if you put a bus out on the road every day, will you absorb that cost? We can't absorb. We'll certainly pass it. Can you afford it as the public transport sector?
Right now, you can see that the public transport sector is not improving. It's not growing. If you look at it, it's kind of stagnant. You see one person coming here, but it's a matter of time. That person is going to collapse. You can't see serious investors bringing big money into public transport investment, which means this. The vehicles that are on the road are dilapidated, they're getting worn out, they're increasing accidents, they're increasing pollution, and yet you're adding on more tax. We would have liked to see a little more reforms and investment into public transport before we start loading this tax. And to us, whereas you may do that, we would have thought that public transport should have been exempted. That is our feeling.
Okay, all right. We want to take a break, but when we come back, we'll get into some more detail on this, including what could be going up and indeed what the proposals are in terms of reform, including a very interesting conversation that has just started here on perhaps doing an audit of the current Finance Act 2023. How is that performing? What has the market response been like? And then comes Finance Bill 2024. My guests back with me in a moment, and your feedback as well. Remember to use the hashtag #TheExplainer, and I'll be getting to some of that in case you've got some more questions. We'll be posing that to my guests as well. We're back in a moment.